Welcome everyone to Vested Interest. This is Shane back again for another Stock Pick of the Day video. It is December 26th, the day after Christmas. Hopefully you had a great Christmas with your family, getting ready for the new year, wrapping up the last investing week in 2023. Today we're going to take a look at Apple. This is an iconic company, I'm sure, unless you have lived in a closet or under a rock or on Mars or out of this planet somehow. You are probably well aware of this company. They are out of the information technology sector. Let's jump right in. If you want to know more about them, check them out at www.apple.com. That's www.apple.com. That is their homepage where I pulled this from. And like I said, you are probably very familiar with this company. You probably own some of their products, right? MacBook Pros, iPads, HomePod Minis, the AirPods. I know my wife has some AirPods. I believe both of my daughter's phones are from Apple phones, and they just have a variety of products around that base, the information technology sector, right? Their stores, their Macs, their iPads, iPhones, the watches. I know my wife has one of their iWatches, Vision, AirPods, TV and homes. I think they have one of those headsets now, the VR headsets. So they're in gaming as well. They have their Apple stores where you can go in and get their Genius Bar or an Apple Tech that you can go talk to. Apple Wallet, Apple Cards, Apple Pay, Apple Cash. So they're involved in the pay from person to person payment that they have, similar to like a PayPal and that sort of thing, right? And they are for businesses, education. So schools use them as well, healthcare, government, right? So they are a huge company, huge conglomerate. Their bread and butter are like I said, the iPads, the MacBooks, the iPhones, the AirPods, I believe, are pretty much a staple, and all of the other accessories around that particular brand. Like I said, unless you lived in a closet or in some far off galaxy, you're probably, and heck, you may even be well aware of who they are if you lived in some far off galaxy. They are that popular. Apple is a well-known brand and name at this point. Reason we are taking a look at them down is because there was a lot of green in the market today. A bunch of people must have been itching to get into the market after Christmas, but this was one of the few companies that was down, so they were down 0.28%. So figured we'd take a look at them. We are talking about Apple Inc., ticker AAPL, out of the information technology sector, closed out the day at $193.05. 52-week range as low as $124.17, as high as $199.62. So they are right up against their 52-week high. Average volume 54.1 million. Today's was 27. Very sporadic today. A lot of volatility. Market cap of $3.002 trillion. That's right, with a T, trillion, not a B. $3.002 trillion. They're one of the few companies out there that is $1 trillion, and this is a multi-trillion-dollar company here. Beta of 1.31, so they are a little more volatile than the overall market, and you can see that volatility throughout the day here. Price to earnings ratio, in my mind, this is extremely high, 31.44. I just believe at this point, I know they're still growing, I know there's still areas they're expanding into, but I just don't understand how they can still justify such a high price to earning ratio. In my opinion, they're a little overpriced. We'll see that here in a little bit. Why I say that. Earnings date is somewhere between, or I'm sorry, let's finish up. 31.44 price to earnings ratio, $31.44. EPS, earnings per share, is nice, very nice EPS, sitting at $6.14. Earnings date somewhere between January 31st and February 5th. Forward dividend, 0.96 cents. So 96 cents, only a 0.50 dividend yield. Very, very low dividend yield on this one. Ex-dividend date, November 10th. Looks like they paid out their dividend on November 16th. So you would be in line for the next dividend if you were to buy them now. You would just have to wait a little bit because they just paid out on November 16th. And a one-year target estimate, at least according to Yahoo Finance, where I pulled this information from, $180.62. So they see them as overvalued as well. Right? So that's number one. Let's jump over to statistics, drop down to dividends and splits. We're going to look at dividend yield theory and see if dividend yield theory sees that they may be overvalued or undervalued. And to do that, you look at the 5-year dividend yield average, 0.82%. You compare it to its current 0.50, or over here, forward annual dividend yield, 0.50, same number. And since it is lower than their 5-year average, that speaks to overvaluation, right? So Yahoo Finance estimates they're overvalued. Dividend yield theory says they're overvalued, and significantly overvalued at that. So again, this is one I would want to pull back significantly. I've been watching some of Buffett's 13Fs, and in my opinion, he is buying right around $140 per share. That seems to be where he likes it, somewhere in that range, 140, 130 to 150, somewhere in there seems to be the range he has been acquiring shares over the last several years, for whatever that's worth. I'm not saying you should copy Buffett. I'm just saying this is one of his biggest positions. It's actually the biggest position, and he seems to be buying around the $130 to $150 mark. Now, very low payout ratio, 15.33%. So they have a lot of room. Even though this is a low starting dividend yield, if they were growing this fast, it may make it worth it. But let's see if that is the case. We also want to get into the financials of a company. If you are investing into individual companies, you really need to understand how to read the balance sheet, read the income statement, look at their debt to equity ratios, assets over liabilities. Is their revenue growing? How do their margins look? What is their return on equity? What is their return on invested capital? All that information you will find under the financials. You also want to look at, as a dividend growth investor, at least I do, want to look at free cash flow. Dividends are paid out of free cash flow, and typically if a company has growing dividend or growing free cash flow, they have growing dividends to match. It's also how they pay down debt, repurchase shares, invest back into the company. So free cash flow is important. Going back to 2020, looks like $73.3 billion in free cash flow, jumped up to 2021 to $92.9 billion, 2022 $111.4 billion, 2023 so far looks like a little drop, though their year is not over, $99.5 billion. Looks like to date they're at about 100.9, so it does look like they're going to beat their 2022 numbers. Overall from 2020, very nice steady free cash flow growth, also repurchasing a significant amount of shares each year as well. So very good numbers overall on this company. The only thing I don't like right now so far is the valuation. Let's continue. Now, stockanalysis.com is another source that I like. I always recommend more than one source so you can back check the information you are getting is accurate. You can pick any sources that you like. I know there's other ones out there that people prefer. Just make sure that you are not just tuning into one source for your information. Go to multiple sources, at least two, to make sure the information you are getting is accurate and up to date. Now, according to the 33 stock analysts they have, take a look at this. They call it a consensus buy. They have a low estimate of $120, which would be a 37.84% decrease from where it currently sits. They have an average estimate of $197.70, which would be a 2.41% increase from where it currently sits. And if it happened to hit their high estimate of $250, that would be a 29.50% increase. All the while, you could collect that point, at least right now, 0.50% dividend. I like to get into the statistics here and look at return on equity and return on invested capital. And I like 10% or better, and this is really smoking those numbers. Return on equity, 160.80. I mean, that is just astronomically high, and maybe that is why people continue to pile into this, even though it may be potentially overvalued, because even though they've been around for a long time and they are a well-known brand and well-established brand, they are still killing it in the numbers, right? Their return on equity, return on invested capital, 56.27% over. I mean, just their numbers are astronomical, right? Free cash flow growth, return on equity, return on invested capital, return on assets, 28.40%. EPS growth, I like 5% or better. They're sitting at 10.38% forecasted over the next 5 years. And their revenue growth is forecasted to grow at 7.59%. Like I said, overall, the numbers just look great. The only thing I don't like is the current valuation. I would really love a pullback on this one. Dividend history here. They are a quarterly payer. They pay out on the February, May, August, November timeframe. Again, 15.66% payout ratio, very low. Lots of room to increase the runway on this one. But this is what I don't understand. For as low as their payout ratio is, for as fast as they are growing, their dividend growth is so low, 4.40%. As a dividend growth investor with such a low payout ratio, I'm not looking for overall growth. Actually, if you go into some of the dividend growth calculators, your dividend growth is better on companies that are growing slow. You want faster dividend growth and slower overall stock appreciation growth, actually. I know a lot of people say, oh, look at the total, but I don't look at the total as much because I am not looking to sell shares. So I don't care if a share goes from $100 to $300 and its dividend growth is only, but its dividend growth is only 1 to 2%. I want something with faster dividend growth and not necessarily overall growth. I'm looking for the dividend payout, right? I don't want to ever sell shares. So I want more dividends. I want more dividends, higher dividend yield, faster dividend growth. This one, I love the low payout ratio, but I hate the dividend growth. I want to see more. I'd love this to be in the double digits. 10, 12% would be ideal, even 8%. Double this up. Give me more dividend growth on a company with such low payout ratio and such great numbers. It really should be. But anyway, let's keep going. 2020 here, November 6th was at 20 cents. May 7th, 2021 jumped it up to 22 cents. May 6th, 2022 jumped it up to 23 cents. I mean, see, that's a penny, half penny, or a penny and a half, a penny. It's just not a lot of dividend growth for it being such a low payout ratio and the numbers being so high. And then May 2023 up to 24 cents. I would expect in 2024 another, bump up by a penny. Seems to be, they jump up by a penny, it seems to be. So I would expect that same penny growth here coming in 2024. This is the vested interest stock screener. Pause this at your leisure. You can run through this and see what I use on a high level to look at a company if I'm interested in investing. If I am interested, it goes into my watch list, and then I do more of a deep dive, do a discounted cash flow analysis, see what I'm willing to pay, and look to jump in whenever it is within 15% of its 52-week low. Well, that is it. That is Apple. Let me know what you think down in the comment section below. Is it in your portfolio? Is it one you are watching? It is one I am watching for more of a pullback. Again, it seems to me in the 130 to 150 range. It seems to be fair valued, or maybe even a little undervalued, under 140. But that seems to be where Buffett likes it. That's where I'm looking for it at. It is one I really am not jumping at a chance to invest in it. If there's nothing else to invest in, whenever it hits the range that I want, I would love to jump in because it does have a lot of growth. It would offer my overall portfolio some growth, though not a lot of dividend growth. I really like a lot of other companies that have a little bit higher dividend growth, especially with such a low dividend yield. I wouldn't mind low growth like Verizon. I don't mind the slow growth of Verizon, 1 to 2%, because they're at a 7% dividend yield. But this company is not growing a whole lot faster than a company, as far as dividend growth, than a company like Verizon's dividend is, and I get much better yield out of Verizon. And I know that may be counterintuitive to some of you that are older, or younger, and if you have different investing criteria, that's fine. If you're on the younger side and you're looking for more growth, this is probably a great company for you. Just for me in my mid 40s, looking to retire within the next 10 years anyway, I just am looking for low dividend yield is fine if it's paired with high dividend growth. That's all I'm saying. Well, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the button. Hit the subscribe button down below. Subscribe to the channel. Join the vested interest community, building a community of like-minded dividend growth investors so we can share our experiences, share our opinions on stocks like this, what we may be watching, what we may be buying. And if you have any suggestions, I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So again, if you have any suggestions for a company like Apple you'd like me to cover in the Stock Pick of the Day series, drop it down below and I'll work into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes with those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing in for educational and entertainment purposes. Investing involves risk and money. Should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.